Explain, what is PMI and how can I avoid it? Do I have to pay that?
No, PMI is private mortgage insurance. On certain loans like a VA loan or FHA loan, you have to pay it. But if you're buying a house on a conventional where they require PMI, and what PMI actually insures the note for the lender in case there's a loss in foreclosure. But there's ways to avoid it. For example, if you're buying a $500,000 home, you can put down 5% and get a second lien behind it. As long as your first lien is 80% or less, it avoids PMI. And the end result of that is the payments are always less with a second lien. The payment, you get a tax write-off where PMI is not deductible in many cases. You are building more equity in your house because you're amortizing a second lien note rather than just paying PMI. That's kind of like throwing money out the window. So it's a much better deal. It also gives you some other advantages. You can pay your own tax and insurance if you so desire with a first and second lien. And I'll tell you this, very few companies offer it anymore. And the reason they don't offer it is they make more money doing one loan than they do two loans. And you have to do a little more work to do two loans, but it's much better for consumer.
Now, if I did have PMI and I died, does it pay off the note for my wife? Or
No.
is it just for foreclosure?
No. PMI is only in the event that the lender's taking a loss.
And you pay to protect them with PMI.
Well, that's exactly what you do. It's
Yeah.
like insurance, that the note will be paid on time, and if the note's not paid on time, if it ever goes into foreclosure, then the PMI company makes the mortgage company whole.
Now,
They take the loss.
if I have a low credit score, I've got to pass bankruptcy, you think I can still get a loan without PMI?
Well, it depends. Depends on how long you've been out of the bankruptcy or foreclosure or short sale. And all those agencies have different time periods. For example, FHA may want 2 years out of a bankruptcy or foreclosure. VA may want 3 years. Convention wants 5 years. So it really depends on the circumstance when it happened. And then you can always get loans. There are companies that will make those loans with 20-25% down. The rate's quite a bit higher, but at least you can get it in the house, because if you had a foreclosure or bankruptcy in the last couple of years, you're not going to get a loan through Fannie, Freddie, or FHA or VA.